take a look at the SPY first to continue our market analysis following last week. Okay, as usual, go to the weekly chart to see the big picture. Nah, guys, see this one long upper tail, long upper tail, long upper tail, in Chinese 必死无疑 lah. So surely come down. So last week really came down. So we did last week we did take precaution that okay, we are in the view that the market is going to come lower last week. So what we do is defensive. That means don't go and buy stock because we high chance the market coming down. So you go and buy stock, it's like a bit of swimming against the tide. Yeah, we don't want to do that. Okay, so now as it's coming down, don't panic. Okay, you see this uptrend line over there? Now chances are this uptrend line is going to break. Okay, now you see, when you see support or resistance in technical analysis, they are not magic lines. You need to understand why would a support hold, why would a resistance hold. For this support, right now we are dealing with support. For it to hold, there's only one reason. That means the inflation number is going to be lower. Okay, you see, why is the market coming down and not going up over the past 3 weeks? It is because of the inflation data is pointing upwards. Okay, and we've got quite a strong economy data coming in. That means GDP growth. Then you have got better job numbers. Lesser people apply for unemployment claim. All these are US data information. Okay, so from US we go to the Singapore side. Okay, and all these points to US Federal Reserve may increase the interest rate more aggressively. That is why the market sell down first. Okay, you must understand the flavor that is going on right now at the moment. So that is what is at play right now, fear. Okay, that is why the price likely to come down, and for support to hold, you need that fear to dissipate. Price in, then it will go. So if you use the chart, it is coming down. We cannot guess that it's going to support and then we start to buy this week. We can only know it's going up when the candle form itself and show us like hammer lah, bullish engulfing pattern lah, or so on. So we don't see it, we don't go and buy stock. Okay, so that is how you should do your trading lah. Okay, so now we go to the daily chart. Now daily chart is very straightforward. It's coming down. Okay, so yeah, okay. On the way down, I just to highlight to you lah. On the way down, there will be days it is slightly up. There will be days that it is super down. So more noisy on the daily chart. So if you go to the weekly chart, you can see generally the direction is down. Okay, now go to the daily chart. Now on the way down, look for support. So this is the uptrend support that is possibly to hold. And don't forget the moving averages. Okay, so I've got my template 1 set up. Okay, template 1, I've got 4 moving averages all selected, ready to use. So once I don't want to use any indicator, I go to my template 2. Sorry, template 3. Template 5. Sorry, go to template 5. The easiest to click. Okay, template 5. Okay, and then template 1. Let's come to the moving average. Now, moving average, that's why I don't use indicator too much, except when it is very obvious. So you can see, right, it is a mixed bag. We call this a mixed bag. All of them are closing in together and all of them are flattish. So it is not a very significant reading. What the hell is this line? Why is it here? Just let me get rid of this line. Okay, come. So it is not significant reading of the moving average right now. Perhaps only this green line, where my cursor is going to coincide with the uptrend line. So in terms of theory, okay, I must make myself very, very clear to everybody. In terms of theory, this is the level to watch. Okay, now why I keep emphasizing theory? Because it is found in most books. Confluence, a support, is where you want to look for support to hold. Okay, but practically, when you are trading, when you're investing in the stock market, what you realize is the books only tell you 50% of the story. The other 50% is the market at that point in time. What is the driving force behind? Like I mentioned, it is the interest rate. Okay, the fear of more interest rate hike. Okay, based on what is going on right now, the market don't want 0.5%. Okay, it's trying to price in a 0.5%. So imagine if in March meeting, okay, the Fed increased only by 0.25%. That will be construed as a good news. That it will be construed as a bullish news, and the market can rally off from there. Okay, so that is what we are looking for. So patiently waiting for the chance to pull the trigger. Now let's take a look at my template 5. Okay, come back to normal chart. Okay, so we go for our fear and greed index. Okay, the fear and greed index of New York exchange. You see, we are still some way away from the September low, the one that really very fierce selling. Okay, so we are still quite far away from that low. Okay, it will be very simple, it will be very easy if the market is to fall to that level where my cursor is right now. Then it makes it easier to hunt for stocks to buy. Why? Because grossly oversold. Grossly oversold, chance of a bounce will be higher. Okay, and all the bad news should be priced in by then. I can only speculate now. Okay, I cannot tell what will happen in 2 weeks' time. What is the FOMC meeting going to be? I can speculate. Okay, but it is of no use. So what I learned to do is to wait for the market to come down to this level, and I watch the price action and pay attention to the news. Okay, what is the market looking at? Is the solution in place? Is the inflation data becoming friendlier? That is how we make our trading decision. Okay, so I will never ask you to buy on support, for example. That is very juvenile.